Good morning, folks, and welcome to this live broadcast here on Moneycontrol. You're watching Opening Bell with me, Stacy Pereira, and I'm here to take you through all those news and cues that you need to be watching out for that could go on to impact your trading day. So let's get a quick recap of where we left off last week. And if you have to look at the benchmarks, well, we did see the Nifty 50 gain close to over a percentage point there last week amidst those mixed March quarter earnings. We could say there's also easing tension in the Middle East, falling oil prices that is auguring well for the Indian markets, as well as that healthy PMI number that we saw on Friday. But of course, this is a truncated week and the market is expected to consolidate, albeit in a positive bias, we would say, with focus on, of course, there is the Fed interest rate decision, which will be out on 1st of May. Then you have a whole host of different corporate earnings that is mostly going to be led by the Adani group of stocks all through week. There's also the monthly auto sales numbers that comes in, and of course the manufacturing PMI data. Now all of this will definitely make us look at stocks more specifically in this whole setup. It is going to be a pick and choose stock specific market that we are going to be leading up to, and we'll be discussing all of those in detail. But first, let me take you through all the top headlines. The Nasdaq and S&P 500 ended their losing streak to record their best week since November, as stocks rallied on that encouraging inflation data as well as strong earnings from the big tech companies. We look at Asian markets, those ones traded mixed despite a strong handover from Wall Street. The GIFT Nifty is also suggesting a higher start for the Indian markets. And reacting to those Q4 numbers is what we're going to see when the markets open. Maruti, which reported a mixed fourth quarter as margins and operating performances missed estimates. HCL Tech reported a muted revenue and growth in line with estimates, but growth outlook is at about 3 to 5%, which is below their FY25 expectations. If you look at ICICI Bank, that one beat street expectations, but core operating profit growth lags that loan growth for the second straight quarter. And in key numbers to be watching out for today, Ultratech Cement is likely to report higher volumes but lower realization in the fourth quarter. Also watch out for numbers from retailer like Trent as well as Tata Chemicals. And we talked about development, but the Congress only talks of looting your inheritance, says Prime Minister Modi on the issue of wealth distribution. Speaking exclusively to the Network 18, he also says that the concept of inheritance tax is an urban Naxal thought process. The Prime Minister also criticized the Congress manifesto, saying it flouts the constitution and is an insult to leaders like Ambedkar. Just about 10 minutes to go, and we are going to see what this new week has for the markets, whether it is going to be a higher highs or whether there is consolidation that will take place. Well, we did manage to snap that winning streak on a Friday. However, it is pretty much a tug of war, we would say, between the bulls and the bears at this point on the Lal Street. But let's also understand some of the F&O cues that we are getting and that you need to keep your eye out for. Well, according to the weekly options data, we did see about 23,500 strike, which own that maximum call open interest with about 62.9 lakh contracts. Whereas on the put side, we did see the maximum open interest seen somewhere around 21,500 strike, and this is likely to be that key support level for the Nifty. That saw about 52.88 lakh contracts for that 21,500 put strike. Now, if you're talking about the Nifty PCR, that one pretty much indicating the mood of the market fell to about 0.96 versus the 1.28 levels. It means that there are still at this point, it's not below that 0.7 level, which kind of turns the sentiment to a bit bearish, but we are still on that positive bias, we would say, at this point. But if you look at the F&O ban list, now that one's interesting because there aren't many stocks there except for Vodafone Idea, which has been retained into the F&O ban list for April 29. Now, talking about the fund flows, we did see FIIs become net sellers again, selling close to 3,408.88 crore worth of shares on April 26, whereas of course it was the DIIs pumping in all of that, bringing in about 4,356.83 crore rupees according to the provisional data put out by the NSE. Now, in terms of stocks that are going to be putting out their earnings, we do have Ultratech among your Nifty 50. Then there are a couple of mid-cap IT stocks that you could keep on your radar, that of Birla Soft, there's K-Fintech, KPIT Tech. There's also the likes of Canfin Homes, Tata Chemicals and Trent, Poonawalla FinCorp and Shopper Stop, among others, that will be reporting their Q4 numbers. So let's discuss all of this and a couple of reactions that we're going to get to stocks that have already put out their numbers. And joining me for that today is Milan Vaishnav. He's the founder and technical analyst at ChartWizard FZE, as well as Gemstone Equity Research. Good morning, Milan. So good to have you with us this morning. Let's talk about firstly the F&O strategy. What should really be, one be looking at? We are seeing quite a bit of swings, but then of course on Friday we did have that pullback as well. But so far we have been talking about the buy on dip strategy, but how long is that really sustainable, or do you think it is more of a cautious stand at this point? So what would be your trade strategy for both the Nifty as well as Bank Nifty, especially also given the fact we are in a truncated trade week?
Well, good morning, Stacy, and thank you for having me here. To begin with, I see multiple things happening in the markets. To begin with, I expect that minor technical rebounds will continue to take place, but in the same breath, I also feel that markets will continue to find selling pressure at higher levels, and by and large, it will continue to remain in a range. While I say this, I also take a look at Bank Nifty, which I find that it has got a major resistance at 48,600. But again, at the same point in time, it's in a more clearly defined range of 47,000 on the lower side and 48,600 on the upper side. So if we expect the market moves over the coming week, I feel that Bank Nifty, we will see Bank Nifty improving its relative performance against the Nifty. That is point number one. And number two, I expect markets overall, by and large, Nifty especially, to continue finding resistance at around 22,700 levels and higher. So I would rather expect the markets to stay in a range, with Wednesday being a trading holiday. I don't see any kind of runaway moves happening in the markets.
Right, so not any big knee-jerk reactions is what is expected. But since we're talking about the Bank Nifty, let's also take our viewers through a couple of stocks that came out with their Q4 earnings, those being ICICI Bank, Yes Bank, IDFC First Bank, all of them that came out with their Q4 numbers on Saturday. But one that will be watched out for, of course, will be ICICI Bank. This after the private lender has recorded a standalone net profit of about 10,707.5 crore rupees, this for the March ending quarter. This is a growth of about 17.4% over a year ago, and they have, unlike the others that we've seen so far, be it Axis Bank or even HDFC Bank, which put out a bigger, higher provision number. Here, the lower provision on bad loans has given some bit of solace, we would say, for investors. Overall, the earnings were pretty much ahead of analyst estimates. The net interest income has grown by about 8.07%, coming in at 19,093 crore rupees. Even the asset quality has improved, with the gross margins declining about 14 basis points sequentially, coming in at 2.16%, whereas the net NPA is also falling by about 2 basis points, coming in at 0.42%. So that be for ICICI Bank. But Milan, quickly, your view, do you think the street is going to give ICICI Bank a thumbs up at this point? And what about the other banking stocks as well? Do you think there is some bit of caution at this point? If you're looking at not just their earnings, because most of them have, somehow been in line, we would say, at least for now, if not a mixed bag. So would that be your rating as well for the banking pack? And how do you think ICICI Bank is going to be reacting post its numbers?
Great. So I would be answering this from a larger technical perspective. To begin with, ICICI Bank, I expect the stock to see a good amount of up move if it is able to move past 1110 levels. 1130 levels. So if 11,130 levels are taken out for ICICI Bank, it would lead to a fresh breakout in the stock. Now, this being said, and if we are talking from an overall banking space perspective, as I just mentioned in the beginning, that I am expecting Nifty Bank to continue to improve its relative performance. And among Bank Nifty constituents, I see SDFC Bank is showing very sharp improvement in its relative momentum when it is benchmarked against the sector index. So, besides ICICI, I also have a positive outlook on SDFC Bank. It has a capacity to return at anywhere between 7 to 9% from the current levels over next couple of weeks' time. And from the PSU space, I am bullish on SBI.
Right. So you still have those main ICICI Bank, HDFC and SBI on your list, and that pretty much makes that pecking order when we talk about banking names. But Milan, let me also draw your attention towards the broader markets, because that is something that has seen quite an interesting move in this last whole week. We saw both the Nifty mid cap as well as the small cap, both of them rallying over 4% in all of last week. And there were days that even despite the benchmarks seeing some bit of flip-flops, you saw the broader indices really hitting new closing highs for that matter. So do you think there is still much more, the party is still there in mid caps even after that huge meltdown that we saw in May, and all of what mutual funds were asked to caution about, be it in the small cap space? Do you think that is over and there is more, there's a reason to actually be putting money in these kind of stocks, be it in the mid cap and small cap space?
Again, here the answer would be twofold. To begin with, yes, mid cap 100 index is it's sitting at its near its high. We have seen a good amount of pullback from its 100 DMA over the last 6 to 7 sessions. But that being said, I still expect that Nifty mid cap space will continue to lag behind in terms of relative performance. Unless that relative performance improves, we cannot expect the kind of strength that we have seen in the past in the broader markets. Now that is point one. The point two is that even when we see this Nifty mid cap index moving towards or taking out its prior highs, this time the stocks performance will be highly selective and stock specific in nature. We will see more defensive plays playing out even within the broader markets.
Right. So be stock specific within the broader market would be a healthier long-term view if you have to go by. Let me just quickly also talk about Apollo Hospitals, because that one, the company Apollo Health is going to be raising about 2,475 crore rupees. This from a private equity firm called Advent. Now Apollo Health is going to be also merging in with KMed, which is this will happen over the next 24 to 30 months. Now KMed is the promoter-owned wholesale pharma distribution company. Now, what does this whole deal really entail? This will be a merger which is going to be EPS accretive at least from year one. If you look at both the companies, and if you look at just KMed, its FY23 margins were somewhere around 3.6%. As for Apollo Hospitals and this deal, it will involve KMed buying out multiple joint venture partners for Apollo Health, and the retirement out of the 890 crore buyout will be the total debt of about 1,290 crores. So there is a big debt component as well, whereas you have the growth capital for Apollo Health at somewhere around 860 crore rupees. So that is going to be interesting to see how the stock reacts to this whole deal that has been put by from Apollo Hospital as well as KMed network of pharma distribution network. But let's address market open for you there. We are just about 0.2% higher. Therefore, the Nifty 50, 22,400 levels is where we had shut shop on Friday and managing to just about stay put, or rather flat there for the Nifty 50. Whereas the sensex also about 200 points of gain. So we would say a gap up, but not touching those 74,000 peaks yet. As for the mid cap and small cap, those indices too are positively placed at opening bell on Monday. You are seeing Both of them gain about the small cap index about half a percentage point of gains, 300 odd points higher for the BSE small cap index, whereas the mid cap index still about just 0.2 of a percentage higher. The Nifty Bank nicely poised about that 48,400 level, so a gap up there for the Bank Nifty as well, and you'll perhaps see the components like that of ICICI Bank and others really push this index upwards. The Nifty IT index also seeing about flat trade, we would say, but with a positive bias at this point as well. Pharma index too, like I was saying, a lot of reactions to headlines which is playing out even for the pharma pack. The Nifty FMCG as well as consumer basket also they're placed in the positive consumption basket. There about some bit of pressure that could be reacting to a couple of earnings that came all of last week. So the FMCG pack though positive at this point, consumption rather flat, we would say. The metal index at least seeing some good traction, about 0.8%, so close to a percentage higher, we could say, for the metal index as well. Auto components also likely adding to the gainers list. There you have the Nifty Auto Index also quite nice and positive there. On your screens now, the gainers and losers, we are seeing Shriram Finance on the back of its earnings there in the positive. Tech Mahindra for the second day, it was the top gainer on Friday as well, 7 odd percent that it gained on Friday. Tata Steel, NTPC, ICICI Bank on the back of its results. So you are seeing those typical players that we are talking about, all of those reactions coming there. SBI, Adani Enterprise as well as Grasim's in the positive. On your laggards list, well, it is taking some time there to reflect, but you do have Apollo Hospitals, and we were just talking about that news data that has come in. You have HCL Tech continuing to be among your laggards post those numbers, as well as M&M, which is among your losers this morning. But let me go back to Milan and ask him if he's, is this the start that he was looking at? And also, Milan is the one who's going to be answering your queries. So do send us any stock specific queries or you would want to have answered, and Milan will be the one telling you what the charts are reading out. So do send us your queries on the live feed right now, and we'll try and have those answered. But Milan, back to the levels on the Nifty, and most of our sectoral indices right now today at least have opened up in the positive, right from even your mid and small cap seeing some good gains there. So do you think we are headed towards those 22,500 levels and then upwards? Is that likely to happen in this this week's trade at least?
Yeah, Stacy, that is what I said in the beginning, that we will continue to find technical rebounds taking place, markets inching 100 points, 150 points higher. But my overall view still remains the same, that so long as we do not mark new highs on Nifty, which is not that far away from the current levels, we should be using all these up moves in protecting profits on the current trades and investments. So I think that all upsides that we are seeing right now should be used more to take some money off the table to protect the profits rather than making new purchases. And so far as new purchases are concerned, we will have to make sure that whatever new trades that we open up, that particular stock should enjoy a strong relative strength, because strong relative strength is something that we will need the most in terms of when the markets are consolidating. So yes, technical rebounds will be there, but my focus would be more on protecting profits at higher levels rather than chasing those up moves.
Right, so you could be taking profits at high level. Let me get a couple of those queries then answered. There is a query from asking about MCX and how should one be looking at that particular stock. What would be your view? How would you suggest one look at MCX? It is trading lower at this point, but after the Q4 earnings, we did see that slump of close to 5%. But how should one be looking at the overall play for MCX?
Well, for MCX, if you are at present invested in the stock, my suggestion would be to take some money off the table to book your profits, if at all you are in profits, and consider re-entry in the stock only above, say, around 40 to 70 levels. But unless those levels are taken out, my suggestion would be to move out of the stock and book some profits. if anyone is contemplating a fresh entry is not advised at this juncture.
Right, so you're saying stay away, not a fresh entry point for MCX at this point, but if you are invested, perhaps profit booking is the way forward. In fact, because we're talking about exchanges, there are a couple of queries even on CDSL as well as BSC. So, Shashikanta Rai wants to know what's happening with BSC and why that one has really ticked the counter there. Earnings are late next week, in fact, for BSC, but any kind of move that is really surprising the street, and what would you be suggesting for both CDSL as well as BSC at this point?
In BSC, it has enjoyed a strong run up over the past many days. My clear cut suggestion would be to book your profits and move out of BSC right now.
And what about CDSL?
Yes, and coming to CDSL isn't doing much here right now. So one can continue to stay invested in CDSL. One can trail the stop losses higher to 2020 and continue staying invested in CDSL.
Interesting. So quite nice to see those charts there showing us different kind of ways. And yes, we have seen quite a run up when it comes to BSE at least. Let's also address a couple of other stocks that will be in focus. Like I mentioned before, Maruti Suzuki came out with its numbers on Friday, and we did see the country's largest car maker record a standalone net profit of 3,878 crore rupees. This growing close to 47.8% over a year ago, and you'd think this is pretty much driven by their strong operating numbers as well as the other income which has increased in this quarter. But overall, the numbers still coming tad bit below analyst estimates, because the revenue from operations have grown just about 19.3% on a year-on-year basis, coming in at 38,225 crore rupees. The sales volume, though, have risen at 13.4%. This close to 5.84 lakh units that were sold during this Q4 period. Also adding to that, EBITDA, which is increased by 40% on a year-on-year basis, coming in at 38,235 crore rupees. Margin expansions of about 170 basis points at 12.2% for the quarter, and the company has also recommended its highest dividend of 125 rupees per share for FY24. So perhaps those invested in Maruti are definitely cheering this move, even though the numbers may be not so much in line with estimates. Quickly, Milan, your view on the auto pack and Maruti per se. Do you see it, touching those new highs, 12,000 levels, anywhere close?
See, I'll answer this from a short-term perspective. Maruti had achieved a breakout in late March when it moved past 11,700 levels, and going by the classical price measurement objectives, the price targets have been met. So we were expecting around 12,700 to 800 levels, and those levels have come. Now, what catches my eye is that the last phase of up move in Maruti has come with a negative divergence of the RSI against the price. So from an immediate short-term perspective, I would suggest the traders to book their profits in Maruti and move.
Right. It's interesting because there are a couple of brokerages that have also come out with their reports on Maruti, and they pretty much have kept that in some of them have increased their target. We would say Nomura has gone with a neutral rating for Maruti, target at 12,523. Even though they say that the margins have missed in Q4, they do see strong tailwinds going ahead. UBS, for that matter, has a buy rating with a target of 14,000. They also see higher costs not really being a major concern for Maruti. Let me now also get a broader sense then, because yes, we do talk about rural recovery and how the auto pack is somebody that we do a kind of gauge that sense when it comes to that rural recovery or the consumption there, be it two-wheelers or even the tractor sales. We are going to have a whole host of auto sales data which will come out in the next 2 days. But let's get an understanding of where we stand in the fundamental side of India's markets. And joining me for that is Feroze Azeez. He's the Deputy CEO at Anand Rathi Wealth. Good morning, Feroze. Always a pleasure to have you with us here at Moneycontrol. I was talking about auto stocks and Maruti just because the numbers came out yesterday. We saw 47% profit. But is that really telling? Are we seeing that rural recovery in the sense of consumption, be it, in our auto pack? Do you still see that there is a way forward for the auto basket as a whole?
There are two parts to it. One is the cost, the other is the effect. If you look into the rural demand picking up, if that's the effect you desire, the government spending has a large role to play. There's a lag indication, lag correlation with respect to rural demand and government spending. If you look at the last financial year, a large portion of the spending happened in the last 4-5 months. We had under-penetrated into our fiscal deficit target till almost November. Now we are 86.5% penetrated into the target by February. So I personally think that the huge bout of government spending has been anticipated, and that's created some degree of rural demand. And whenever you're doing capital expenditure, this government is very clear about growing capital expenditure. If you see about 38%, after 38% growth, you still are projecting 11.5% growth this financial year. So point I'm trying to make is capital expenditure results in rural demand growth. And so I think it's a secular positive trajectory after a long lull.
I am going to also go back to Milan and get a couple of queries from the IT pack. But before that, back to you, Feroze. If you're looking at what the Fed could possibly do now, we did see the GDP number come in quite below estimates for the US there at just about 1.6% versus the 2.4%. Even the consumption index, the personal consumption index or PCE, that one showing that inflation is propped up at 3.4%. So there again a negative. Does all of this really signal that rate cut that we've been anticipating, or perhaps 3 of them that we've been waiting for in 2024, is that likely to still happen, or do you think that may be cut down to just about 1 or 2, or do you still hold out that things could change? And since the Fed has already mentioned that there are 3 cuts going to happen, we have an FOMC meet that will happen on 1st of May. What are you expecting on that front?
I think there is going to be some degree of deferral and a reduction in the anticipation of rate cut for sure. But I think we sometimes overestimate its impact on Indian capital markets, because most of us have a large portion of our monies and into Indian capital markets. So if you look at India, I personally think that the rate cut from 6.5 repo is going to be a little delayed, 8-9 months. But I think the financial services is already picking up. If you look at financial services sector, which is an interest rate sensitive sector, has done beautifully, and in spite of that, it's quoting at about 17 PEs. The 21.2 PE is the average PE for the last 3 years. The mean PE is about 2.24. Median PE is about 22 of the sector of Nifty financial services, what I'm indicating. So the point I'm trying to make is, yes, pointed question answered in terms of a delay, or now you can't expect 3 rate cuts, but one of them seems fair from the global side. But I think in this time, FIIs are behaving very differently. Even if they expect a US slowdown, they are pumping in money into India. If you look at Jan, Feb, there was negative flows, but I think that's changed reasonably with about 4,000-5,000 crores inflow this month so far. And domestic guys have pumped in about 40,000 crores in this month so far. So I personally think our markets are being isolated because inflation and interest rates have been below average 10-year levels for India, unlike most of the emerged economies.
Right. So we're not going to have that much of a repercussion from whatever decision the Fed takes. But since we're talking about IT, Milan, there are a couple of queries. Rutwe wants to know your view on HCL Tech. It's the second session where it's down and about. So what would you suggest on HCL Tech? And since we're talking about IT, there are a couple of queries on KPIT, which is also going to be coming out with its results. And we have a couple of other mid-cap IT names that are going to come out with their results. So what would be the pecking order for the mid-cap IT space? Any interesting stocks there? And HCL Tech, your insights on that one?
Yes, before I say anything on HCL Tech, I would just like to say this in interest of the viewers that whatever answers that I'm giving here right now, they are being given from a short-term perspective because generally the answers would be different if some a long-term investor is asking a query and it would be different for a short-term trader. So please keep that in mind. Switching back to HCL Tech, if you are currently invested in the stock, I would suggest you to continue holding on to it because it's about to get oversold and it's approaching major pattern support levels. So even if you are into loss in HCL Tech, I would suggest you to have some patience and continue holding on to this.
Right. Quickly, I'm going to also pull in another query there coming in. Mayank Vyas wants to know your view on Voltas, and given that we are in the peak of summer, we've seen some good headlines saying that there have been some really crazy number of ACs and air conditions that have been sold through this whole. We've not even hit that peak, but we are seeing some really good big sales numbers. So, what would be your view on Voltas?
Voltas, it has had a strong breakout, in fact, very strong breakout above 1150 levels. And now the stock continues to inch higher, and there are no signs of any let-up. So all that we can do is that so far as fresh entry is concerned, one can enter fresh in Voltas, but we have to keep something very clearly in mind that fresh entries will not come with a favorable risk to reward ratio, keeping especially because of the kind of strong run-up that we have seen in the stock. So whoever enters afresh into Voltas, make sure that they keep their very strong stop losses in place and do actually follow that. Now, for those who are continuing to stay invested in this stock, since it is continuing to move higher, all I can say is that one can stay invested here, but also keep trading their stop losses higher so that in event of any corrective move, the bulk of the profits stay protected.
Right. I hope that answers the query on Voltas. But let me go back to Feroze then, and he was talking about FIIs and how they've been, net sellers at least all of April. If I have to give you that figure, it stands at 36,933 crore rupees. That's how much the outflow has been from FIIs. It's highest since January 2023. And if you look at DIIs, they've been the ones doing the heavy lifting. 42,065 crore rupees worth of buying that has come from the domestic institutional investors. Do you think, Feroze, this is likely to change post the election outcome? Are we going to see FIIs come flocking back to India? You did say India has enough and more reason and has been resilient all this while, but why this kind of outflow then, and what can perhaps change it?
See, I think if you look at the April number, it's about negative 8,659 crores. The March number was positive 35,000 crores for FPIs. But I think if you read between the lines, the FPI behavior is very different this time around. I'll answer this in two parts. The first one is FIIs and FPIs are investing in small cap stocks of India dramatically over the last 1 year, and this is not being spoken about enough. Whenever an FII is going to buy India and not the top 100 stocks, which are very, very liquid counters and derivative counters where getting out is easier, but if it's going to go into the broader market, that implies that the money is not hot money. That's money which the FII very well knows you can't sell it in 5 days. Like SEBI, of course, has put a mandate in terms of domestic funds liquidation. That implies the same thing applies to FIIs as well. So whenever money comes into broader market from a specific institutional set, that implies that the money is for the long term. That's one thing which I think makes me believe that the FIIs are buying the broader market, and that's great news. The second very important thing is FIIs have this huge attribute of loving status quo. They don't fall in love with governments, but they fall in love with status quo. If this election, like it is anticipated, if the government continues with the third term, the kind of influx of money which is waiting on the sidelines is surprising. The kind of money which is coming from even Japan would surprise you into the broader market of India. So to answer your pointed question, a huge influx of money is possible after the election results if status quo stays, which is, of course, the larger expectation is why the markets are where they are.
Right, and talking about Japan, we saw the yen really reach some new lows compared to the dollar 160 odd levels is where we saw the yen this morning. But let's also talk about IREDA. Now, this one is quite an interesting stock and has seen quite a good run up, and then perhaps some correction that it saw post its listing, and good numbers we would say. But now what the news flow that is coming is that the Public Enterprise Department has gone on to grant it a Navratna status for the company. Let me quickly get Milan's view on how the chart is looking for IREDA. Is there enough reason to be cheering just this Navratna status, or it has seen quite a valuation stretch, we would say? Or do you also have the view that most of our PSU companies have had that good run up, so now perhaps is where we're seeing them consolidate, and maybe this would be a good time to enter something like an IREDA?
No, in fact, IREDA has shown a strong breakout from a bullish ascending triangle formation. So again, looking at this from a purely technical perspective, I think it offers us a fresh entry opportunity. We can expect it to test the previous highs around 215 levels. However, we will need to keep a stop loss of 175 on the stock, but yes, it has given us a fresh entry opportunity.
Right, so you have a fresh entry opportunity there in IREDA. Feroze, back to you then. Do you think there is still more room in the PSU space? At least the run-up that we've seen to the elections, most of these stocks saw good traction. And which would be those sectors within the PSU pack that you would want to be, that you would find really more room to be entering in?
Yes, Stacy, I personally think that PSU is a little broader theme. I would say financial services as a sector, I'm reasonably bullish because that's a very diverse sector. You have a stock in the life insurance space with 100 P, and you have a PFC with almost about 7 P with a large headroom. So you have to be more selective. This financial year is not just about just buying all PSUs and making money. I personally think that in the financial services, there are some PSUs which are very attractive. And also from a perspective of PSUs in the infra space will also have a large uplift in terms of the re-rating. That's point one. Point two, I personally think there is something happening in the market which I think the derivative traders have to be very, very careful about. There's a lot of institutional rejig which is happening. If you see the last expiry, so I'm bringing the attention of every derivative trader to something which is very unique. I've been on derivative terminals for almost about 17 years. I've not seen this kind of sharp moves on expiry days on options which are 1-2 rupees moving to 35 rupees. The point I'm trying to make is stick to financial services as a sector, stick to lower PE stocks, lower your derivative exposure if you are a retail trader.
Right, so lower that derivative exposure is quite interesting, especially because there are so many rules that are changing, so many different things that have come up from the regulator as well in that whole space. So do a word of caution coming there from Feroze as well. Milan, quickly one last query, and then your picks that you would want to give out viewers. Jayant Navalvade wants to know your view on Glenmark Life. So maybe we can address that one for him, Glenmark Life, and also then the picks that you have for our viewers.
Glenmark Life continues to remain in a trading range after it came up from its high point. So if anyone is invested in the stock, if the person who has asked the query is invested in the stock, he can continue to stay invested, maintain a stop loss of 770 on the stock. If he is asking for entering or making a fresh entry is something I would not advise at these levels.
Right, so no advice, no entry level for Glenmark Life. But what are your stock picks for our viewers? Milan, do you have anything on your radar for the short-term perspective, like you were mentioning, any stocks that are looking attractive to you?
Yes, I have my three picks to begin with. It's ONGC. I would suggest buying ONGC above 283, and while maintaining the stop loss of 273, one can expect 300 on the stock. The other thing I'm looking at is at a potential breakout in Federal Bank. One can buy above 157 with the target of 164 and with the target of 174, and keeping a stop loss of 150 on the stock. And my last pick would be IRCON, IRCON. One can buy about 250, expect 275 on the stock, maintain a stop loss of 238.
Right, so IRCON, Federal Bank and ONGC are Milan's pick. I'm going to have Feroze have the last word. Then Feroze, quickly, the sectors that are, you see available at compelling valuations, even post this correction that we're seeing. Do you see IT, FMCG really being those dark horses for FY25? Or where will you be placing your bets and which sectors for this FY25?
In the chronological order of risk reward, I would say financial services is Nifty Financial Services very well valued. If you look at the earnings estimate is 1,444 for the next financial year, which implies if you look at the average P, there's a 37% negative drop as per us. So that can get corrected next year. Infrastructure broader theme is very good, I personally think. Then comes IT and then pharma. If you look at the largest weight in Nifty, which is about 27-28% is financial services,
Right.
and that's what keeps me positive on Nifty for this financial year.
Interesting picks there. You still like the BFSI space, which is topping Feroze's list. But let me thank both my guests, Milan, Vaishnav, as well as Feroze, Azeez, for giving us your time, helping with our viewer queries, and also giving us a broader sense of where we are headed with the Indian equities and where we are looking at. But before we move on, well, the big exclusive that we had from Network 18 with none other than the Prime Minister Narendra Modi, who sat down with Network 18's Group Editor-in-Chief Rahul Joshi, as well as News 18 Network's Vilas Pare, as well as Hari Prasad, and went on to discuss a whole slew of issues making news from the electoral bonds to the Congress manifesto. He did speak about the controversy around the inheritance tax as well as wealth distribution. Listen to a small excerpt from that exclusive conversation.
सैम पिट्रोडा जी ने जो है इनहेरिटेंस टैक्स की बात की, जो हम लोगों की जमा पूंजी है, जब हम अपने लोग पूरा बचाते हैं अपने फैमिली के लिए, जब हम उसको अपने आने वाली जनरेशन को देंगे तो उस पर भी टैक्स लगेगा और ये टैक्स बहुत बड़ा टैक्स हो सकता है. तो क्या आप कहेंगे कि बीजेपी अगर आएगी तो इस टैक्स को कभी नहीं लागू करेगी?
भारतीय जनता पार्टी क्या करेगी, हमारे मैनिफेस्टो में साफ हमने लिख करके लाए हुए. अब उन्होंने कहीं सदुपा छोड़ दिया तो मैं भी वो झंडा लेके घूमूंगा, ये सवाल आपके मन में कैसे आ जाता है? भारतीय जनता पार्टी की विचारधारा साफ है जी. हम अपनी विचारधारा के आधार पर कार्यक्रमों को लेकर के, मैनिफेस्टो को लेकर के देश के सामने जाते हैं. कृपा करके ऐसे महाशयों के विचारों को हम पर मत थोपिए भाई.
मोदी जी, राहुल गांधी ने एक बात और कही है. वो कहते हैं कि जब वो सरकार अगर उनकी आएगी तो वो एक नेशनल एक्सरे कराएंगे. इसी से जुड़ा सवाल है, इसीलिए मैं पूछना चाह रहा हूँ. एक नेशनल एक्सरे कराएंगे. बात सिर्फ कास्ट सेंसस की नहीं है जो कि वो करते आए हैं, उस पर भी मैं आपका मत जानना चाहूँगा. मगर बात वो कहते हैं इससे आगे है. बात कास्ट की नहीं, बात जस्टिस की है. और वो कहते हैं कि हम जो है एक सोशियो इकोनॉमिक सर्वे लाएंगे, एक इंस्टीट्यूशनल सर्वे लाएंगे और उसमें देखेंगे कि किसके पास किस जाति और किस उस वर्ग के पास क्या है, कितना धन है, कितनी इंस्टीट्यूशंस में भागीदारी है, और उसके बेसिस पर हम इस पूरे सिस्टम को रीडिस्ट्रीब्यूट करेंगे. इसको आप कैसे देखते हैं?
सबसे पहले तो इस देश में जो लोग अपने आप को राजनीति के एक्सपर्ट मानते हैं, जो लोग देश के उतार चढ़ाव को बड़ी बारीकी से अध्ययन करते हैं, सबसे पहले उनका दायित्व है कि वो ऐसे लोगों को पूछे कि जिस परिस्थितियों का वर्णन आप कर रहे हो, अगर ये सही है तो 50, 60, 65 साल तो आपने राज किया भाई. ये मुसीबत के जो जन्मदाता आप हो और आपने अब तक की बर्बादी लाई क्यों? पहले उनका जवाब मांगो भाई. नंबर 1. नंबर 2, एक्सरे का मतलब क्या है जी? मतलब हर परिवार में जाना, घर घर छापा मारना. अगर किसी अनाज के डिब्बे में किसी महिला ने अपने गहने छपा के रखे हैं, उसको भी एक्सरे किया जाएगा, उनके गहने ले लिए जाएंगे, जमीनों का हिसाब किताब किया जाएगा और फिर उसको रिडिस्ट्रीब्यूट करेंगे. ये दुनिया में एक माओवादी विचार ने सब किया हुआ है. दुनिया बर्बाद हो चुकी है. ये पूरी तरह अर्बन नक्सल उस सोच का सीधा सीधा प्रगटीकरण है. और इसलिए मैनिफेस्टो आने के 10 दिन तक बाद भी ये जो जमात आए दिन लिखा पट्टी करती है ना, वो चुप रही, उनके प्रोटेक्शन में चुप रही है। तब मिलके मेरी जिम्मेवारी बन जाती है कि देश को जगाना कि भाई देखिए आपको लूटने की ये तरकीब हो रही है। और दूसरा पार्ट है, डॉक्टर मनमोहन सिंह जी वगैरह ने हर बार कहा है कि भाई जो भी संपत्ति होगी इस पर पहला अधिकार किसका होगा। तो हिसाब किताब वो साफ है, वो क्या करना चाहते हैं।
Well, you can catch that whole interview on our YouTube channel of Moneycontrol. That's where you're going to get excerpts as well as that whole interview there. But with that, we're completely out of time. We need to wrap up this bulletin, and it's a goodbye from the entire team that puts this piece together. Thank you so much for watching. But do please post us your feedback in the comment section below, and follow us at the bottom of your screen on the link there. For rest of the updates, stay tuned to moneycontrol.com as well as the Moneycontrol app.